Welcome to the California Housing and Community Development Training Series. Today's session is titled Financial Management, Cost Principles and Cost Types. More specifically, this training will focus on 4 items. We'll start with cost classifications, then move into direct versus indirect costs, continue with the differences between project costs, activity delivery costs, and administration costs, and finally, we'll wrap up with what unnecessary, unreasonable, and unallowable costs are. To classify a cost for the CDBG-CV program, grantees must first determine if the cost is a direct cost or an indirect cost. Then, grantees must determine if the cost is a project cost, activity delivery cost, or an administration cost. Direct costs are costs that can be identified specifically with a particular final cost objective, or programs such as the CDBG-CV grant. Common examples include payroll costs incurred to administer the CDBG-CV award, which must be supported by timesheets and payroll records that detail the date and time an employee worked on the CDBG-CV award. The purchase of supplies and equipment used solely for the CDBG-CV award, and direct awards to eligible CDBG-CV beneficiaries as part of an eligible CDBG-CV activity. Indirect costs are costs incurred for a common or joint purpose that benefit more than one cost objective and are not readily assignable to the cost objective or program that benefited. Some examples include rent and utility costs, accounting and administrative staff, internal auditing costs, motor pools, as well as computers and software. Project costs are the actual costs associated with the benefit from receiving CDBG-CV funds. More simply put, project costs are the most common type of costs incurred for the CDBG-CV award. Examples may include construction invoices to rehabilitate eligible public facilities, or even the purchase of food and packaging materials for a Meals on Wheels program. Activity delivery costs, also commonly referred to as ADCs, are costs incurred for the implementation, management, or oversight of an eligible activity. Some examples include payroll costs to review applications for eligibility to receive CDBG-CV assistance, as well as paper-to-print applications and pens for applicants to fill out applications. Administration costs are costs incurred for the general planning, management, oversight, and coordination of the CDBG-CV award. Common examples include payroll costs to submit RFFs and eCivis, as well as supplies and materials to monitor CDBG-CV subrecipients. It is important to note that administrative and planning costs for all CDBG-CV grantees are capped at 20% of the total award received from all rounds of funding. HCD may use up to 5% of all CDBG-CV funding received for general administration costs, plus an additional 2% for technical assistance. The remainder may be used by units of local government funded by HCD for administrative costs. So now, let's test your knowledge. Match each cost type in the left column with one applicable cost in the right column. Since each cost must be either direct or indirect, and either a project, ADC, or admin cost, each example cost in the right column can be associated with more than one cost type in the left column. So try and find the best match between the two columns. The answers are provided on the next slide. Here are the answers. How'd you do? Again, there may be multiple right answers, but let's review why these classifications are most appropriate. A construction invoice is both a direct cost and a project cost, since it's an actual cost associated with the benefit from receiving CDBG-CV funds. An economic development loan to an eligible CDBG-CV beneficiary is both a direct cost and a project cost, because the cost can be identified specifically with a particular final cost objective. In this case, the final cost objective is the CDBG CV grant, because no other funding source, such as an entitlement home grant, can share the cost to provide the economic development loan. Reporting in Grants Network, or eCivis, is a direct cost and an administration cost, since it's an actual cost incurred for the general management, oversight, and coordination of the CDBG CV award. Costs incurred by a grantee's accounting and payroll department is an indirect cost, since it's a cost incurred for a common or joint purpose benefiting more than one cost objective. This is because the accounting and payroll departments benefit all of the grantee's employees, not just those employees working exclusively on the CDBG CV program. Payroll costs for client intake for a job training program, as an example, is a direct cost and an activity delivery cost, since the cost is incurred for the implementation or delivery of a particular eligible activity. Next, let's look at the 3 UNs. These are costs that are unnecessary, unreasonable, or unallowable. Costs are considered necessary if they are essential to proper and efficient performance and administration of the CDBG CV award. Costs are considered reasonable if they do not exceed what a prudent person would incur under similar circumstances. And finally, costs are considered allowable if they conform to the standard agreement, are treated equally with like costs, are not otherwise ineligible or unallowable, and are adequately documented. So now, let's test your knowledge. Match one of the 3 UNs in the left column with one or more example costs in the right column. Like the previous quiz, there may be more than one right answer. The answers are provided on the next slide. Here are the answers. How'd you do? Again, there are multiple right answers to the quiz, but let's review why these answers are correct. An example of an unnecessary cost is full color intake forms, since color ink is more expensive and is unlikely to be a justifiable improvement over black and white intake forms. Examples of unreasonable costs include limousine travel vouchers, since the cost is substantially higher than a bus, subway, or taxi voucher. Likewise, the purchase of new iPads is an unreasonable cost, especially if similar, less expensive tablets or other means can accomplish the same intended purpose. Examples of unallowable costs are direct cash payments to beneficiaries, which are strictly prohibited under CDBG regulations at 24 CFR Part 570 and are therefore unallowable. Likewise, the purchase of alcohol is also strictly prohibited in the regulations at 2 CFR Part 200 and 24 CFR Part 570 and is therefore unallowable. For additional resources, cost principles are located in the Uniform Administrative Requirements at 2 CFR Part 200, Subpart E, hyperlinked here. In addition, CPD Notice 13-07 defines and contains guidance for classifying costs as program administration costs and activity delivery costs. Thank you for attending this California Housing and Community Development training session on cost types. If you have any further questions, please contact your grant administrator.